Hi, and welcome to this lesson on how to effectively use the Trade ATS Volatility Report. This is the report that we're going to be sending you. It's going to come out at least once a week, and this report is going to have information in it, and through this lesson we want to teach you how to decipher that information, how to understand it, and how to apply it so that you can make the most out of each report. So that being said, let's get into the lesson. I just want to briefly touch on our risk warning. I just want you to understand that the content contained in our volatility report and in all of our training material is the opinions of us at Trade ATS and does not constitute financial or investment advice. So make sure you consult a financial advisor to understand the risk associated with trading. So what's the purpose of the volatility report? Well, the main purpose is to provide you an early warning of possible big trending moves. According to our methodology, we look at the market as in one of three phases. We want to get you into the second phase, which is the expansion going into the trend phase. That's where you get the consistent trending market in that phase, and we want to clue you in to when that's starting to happen. If you know that that's starting to happen, there's a much greater chance that the markets are going to trend, and if they go in one consistent direction, you're going to have a much easier time trading those markets. So that's the main thing that this volatility report is about. So the next purpose of this volatility report is to educate traders on an advanced approach to trading. What we want to do is we want to teach you about price action and how the market moves in phases. If you start your journey, especially if you're new to Forex, if you start it from the focal point of looking at price action and understanding how traders think and who's active in the markets, you're going to skip a lot of the pain that goes with looking at all these other systems and other indicators that are out there, and you're going to go right to the meat of the market. So we want to get you started on that foot so that you can excel quicker. So we also want to give you a plan of action. When we give you the volatility signal, we want to teach you what to do with it. You're going to have some very sensitive price data to work with, and over time we want to teach you how to actually use that data to take advantage of those trends that result from these volatility signals and actually put some consistency into your trading. We also want to provide a valuable free service to the trading community. If you've been looking at trading information online, especially over time, you know that there's not very much value out there, especially for free. We want to give something that's high value, high impact, that's easy to understand, and we want to do it for free to create real value to the trading community, and that's what the volatility report is also about. So you may be asking at this point, why would we do this for free? Why would we give such valuable information away for nothing in return? Well, here's the truth. Our business model is to build a long-term subscriber base for our chart mapping software, our action threshold software. That's what our company is about. You do not need our software to be successful with the methodology we teach, but it does help automate the analysis process. Like any tool, you can get the job done with many different tools, but there's some tools that make it a little bit easier, and that's what action threshold software is. So if traders see value in our free volatility report and our other training materials, then this is no doubt going to grow our subscriber base over time, as it has. So what we want to do is we want to put forth valuable information first. If someone gets value from that information, they benefit from it, then they no doubt want to go to the next level with us and try some of our tools. So that's what this is. It's to provide good value, and for those that are interested, can also try our software as well. And our goal is to make them long-term subscribers. So there has to be a good value exchange for a really long time. So that's what we're out for. And also, either way, we're happy to contribute to the trading community with good analysis and educational material. We want to put forth good information. That's what's got us to the point we're at today with our subscriber base, and that's what keeps people subscribed, is because we give out good, simple, solid information. So we're going to continue to do that through this volatility report. Okay, so now let's go over what's actually contained in a volatility report. So the first thing you're going to get is the actual symbol. What market is the signal, has the signal been generated in? So that's pretty self-explanatory. The second thing you're going to get is the long-short threshold price. Now this is a proprietary piece of information generated by our software, by our methodology. It's an important piece of information. We're going to go into that a little bit deeper here in a second. You're also going to get what's called the directional bias. Again, this is part of our overall methodology, telling you this is the direction that we predominantly want to look for market movement in. So you're going to get that information. You're also going to get some general commentary about the specific volatility signal, that specific situation, just some of our opinions on possibly how it should be treated and how it should be viewed as it unfolds. You're also going to get a screenshot of our software of the situation when the signal is generated. That way you can kind of see what we're looking at and why what's generated the commentary and the signal. And then you're also going to get a live chart button, and this will take you to charts on TradingView is what we normally use. So if you want to just take a quick look at that market, you could just click there and it'll take you in your browser window to look at that market real quick. So now I want to talk a little bit about the volatility signal triggers. How are these actually generated? Well, it starts with us understanding that the market has gone into what we call the expansion phase. This is the second phase of the 3 market phases. So when we know a market it has confirmed that it is now in the expansion phase, that's where it all starts. This serves as a proof of volatility and an indication that institutional money is entering the market. And so more money entering the market means more volume, which equals possible trends. So a key part to the volatility signal is understanding that we've gone into the expansion phase, it's confirmed, and that the trending phase is on the horizon, and that can happen very quickly. It could take some time, and that's where the threshold price will come in, which we'll cover here next. So the long-short threshold price, what does that mean? This is probably the most important piece of information you're going to get on the volatility report. So let's dig into what this long-short threshold price is. So the threshold price is where the scales will be tipped between buying and selling momentum or buying and selling pressure. So if we're above the threshold price, there's more buying momentum in the market. If we're below the threshold price, that's where more selling momentum or selling pressure will come into the market. Now, the key thing with this line is you can actually use this line to manage your risk from, and it also serves as a confirmation of direction. So for instance, if you are long, if you've bought the market and you're above the threshold price, if the market comes through the threshold price, then you may want to start looking at dumping that position. You can use it to manage that immediate risk from. And it's a very sensitive price level to do that from. It's very effective. So let's talk about the directional bias. What does this piece of information mean on the volatility report? So our directional bias is based on a higher time frame. Forming a directional bias is what ultimately stacks the odds in your favor. If you've been trading a while, if you've seen a daily chart, a weekly chart, or a monthly chart, and you see that there's several months going in one direction, going up or going down, you can look at the simplicity of that and understand that there's situations where 4, 5, 6 weeks on the weekly chart, it just went one way. And if you take that simplicity and use that to your advantage, you can do some real damage on the smaller time frames. Just a very simple piece of information. So directional bias is a big part of what we do. On our volatility report, we're going to give commentary based on the higher time frame directional bias, what we think about it, how it's playing into the current volatility signal. And the goal with this is it's going to help you be better prepared for opportunities that have a better probability of falling in line with the higher time frame trend. For instance, if the weekly is long and you have a volatility signal on a 4-hour, we're going to be more biased towards that opportunity playing out to the long side. Let's actually take a look at an example real quick. So in this example, we have our weekly chart here, and this weekly chart is what we're using for our directional bias. Anyone can see that this chart is clearly going down. The current candle's red. Everything just points to down direction. So very simple information to digest right there. Now on our 4-hour chart, we had our volatility signal, we have our threshold price, right? Now if the weekly trend holds, this means that a volatility signal given on a 4-hour chart or on this 4-hour chart is more likely to trend short below the threshold price. So by understanding the weekly direction is short, every single expansion phase on your lower time frame will ultimately end in the market going to lower prices through the threshold price. So we pair these two pieces of information, the volatility signal and the directional bias, and it helps us get prepared. So on this 4-hour chart, in this situation, you wouldn't have got too caught up in that initial long trend when the volatility signal first issued. You would have been much more focused on when is it going to go short, because the weekly is short, and as long as the weekly is short, it's stronger than the 4-hour, and it will always win. So this is going to help you stay prepared for the impending move and then tip your bias in line with that higher time frame so that you can add that consistency to your approach. And the last piece of information you're going to get from the volatility report is just some general commentary. Again, this is our opinions. This is what we think of that current situation, maybe some things that we think you should take into consideration. Like I said, just some general market commentary to help you navigate the possibilities of that specific volatility signal. That does it. You're all set. So that's the end of our volatility report trading video. What I want to leave you with is I want to tell you, if you haven't already done so, please go watch the fundamental training videos. Those videos, especially the Forex Master Pattern video, will really help you understand the volatility report signal better. It's going to help you understand our overall methodology better. We hold nothing back on those videos. So you're going to learn everything that we're about, and you're going to learn a super simple approach to the market. It's going to be super effective. Again, when you learn that market approach, start mapping out the market according to the 3 market phases. Start drawing your boxes on your charts. Start mapping out the average price line out of those boxes and see how price interacts with those lines. It's going to really help you get experience with this methodology. And then when we send you a volatility signal, you're going to be even better at managing the opportunities around those signals. And also, be patient. This is going to happen over time. It's not going to happen all in a day. So spend time working with the 3 market phases, spend time mapping out your charts, spend time interacting with the market on this level, and you'll get better and better over time. Thank you so much for taking the time to watch this training video, and we really look forward to being part of your trading success in the weeks and years to come.